The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon. Dow's up 8 at 18,268. S&P's unshit 2131. Comp index is down 2 at 5163. Wow, the VIX is at 19.09, up 38 cents. Wow, this is, all right, we'll get into that. The E-mini is down 2 at 21.27. You can see there's a very strong single leg A up, just so important. By tomorrow this time, will the E-mini be below 2100 or will it be above 2140? Just keep it as simple as you can. The down channel that's been occurring in the weekly chart of the E-mini with the technicals deteriorating says that the stochastic now at 26% trying to turn around. It's very important. The MACD really is just flattening out. It hasn't started to move higher. We've had almost like an A to B equals C to D. This is a traditional lightning rod down move from the 2185 round number high to the 2100 low, then spike up to the 2172 level, and then down, of course, to last week's low of 2078 before the Comey report. 120-minute chart has made a peak C1, C2, which I showed my subscribers this morning. Sometimes what we're looking at with peak C1, C2, if you hold key support level, in this case the 200-period moving average of 2120, you can, in fact, make that D. That under these conditions, you have a market move up almost 400 points yesterday because of the relief that there was no email repercussions. That's what Comey has said so far. And then a follow-through rally to a plus today after being down just a little bit is saying that this market is setting up and really expecting by day's end that it's going to be a Clinton win. This is the way I'm looking at it market-wise. This has got nothing to do with voting or whatever. Market-wise, it seems that the market is saying, we are satisfied that certain criteria have been met. And at this point, if you looked at the stocks that ran up yesterday, and I don't think it was all short covering, it was huge short covering, but I think it was also fresh buying. We need to look at some factors in a moment and go through and see exactly what is this market saying right now and what would be the surprise, negative and positive. So let's continue. I want to go to gold. Look at this. Gold is up $5. Let me double check that that's the latest. We're about $5 at $12.84. No great shakes here. It made a peak E in the daily, taking a nice breather. It's had a nice move up in the weekly, but the weekly still suggests that there should be some sideways move. By the end of the evening, of course, a lot depends on what happens. Look at the dollar. The dollar had a nice move yesterday. Not great. It was really a nice move, not great. Now, when you see whatever instrument you're following, if it stops dead at a very important peak, trough, moving average, gap, whatever it is, in this case, it's the 9-period moving average. It's sitting right on the dollar at 97.71. It's sitting exactly on resistance. And that resistance will be gone if the dollar spikes to the 98.35, 98.50 area by tomorrow morning. If there's a plunge and it goes below 97.35, the low of 3 days ago, that's setting up a weekly peak D that says, uh-oh, time and price is now not on your side. It's going to make it really tough if that happens for the dollar to break to all-time highs, which is what I have been anticipating over the coming weeks. We'll see what happens. Days young. Now, let's just look at some of the other aspects. If you look at crude oil, crude oil is up 12 cents at 45. What's really interesting about this, the daily chart, the weekly chart are all really poor. The monthly chart, well, we've got a couple of weeks to go before, quite a few weeks to go before the month's end. So let's not even say anything about the monthly, other than to say that the 9-period moving average of 47.77 is going to be quite critical as a repellent zone. If you look at the 120-minute chart, let me just put this little up arrow in. If you look at the charts on the left, daily, middle, weekly, always. On the right is the monthly, and right here in the corner, we've got the 120-minute chart. The 120-minute chart has gone to a peak A, B, C, D, E, and there's a spike here. It hasn't gone to an F or maybe recycled to a new leg, but this is going to be really important. Let me give the parameters, and it's a question that I got earlier on about the parameters for crude oil. I'm just to make it as clear as I can. The daily is in a sell mode. It's going to take a lot to reorganize the technicals to be able to say that it's gone from a sell mode to a buy signal, which negates the sell mode, etc. But the only way you can do that is for crude oil to trade 2 out of 3 sessions. That's not on a week. That's over a period of over 3 sessions. 2 out of those 3 sessions need to close decisively above 46.90. At 45.03. For crude oil, that should not be a big deal. It will be a big deal if it cannot do it. It needs to close over the 46.90 area so that it is clear the 9-period moving average and the 47.20 9-period moving average of the weekly chart will become a target. At this particular point, not happening. It's going to be real tough to do. On the downside, a close below $43 signals decisively that crude oil is in a serious has serious upside resistance, and the downside is kind of now becoming a black hole if that occurs. All right, now we want to go to bonds. The TLT is down 31 cents at 130.31. What does that suggest? It suggests if I go to the TYX, the TYX made a peak E, holding the 9-period moving average. If it breaks above 26, if it gets to 26.50, this is the TYX, this is the 30-year 30-year Treasury bond yield. If it goes above that, I have to call it a recycle, and I have to call it F/B. And that's a recycle because it's a leg E. It reignites the upside action in the weekly chart. And instead of a leg 5, Chapman wave 5, that'll suggest that 5 is extending. And the stochastic is at 90% in the weekly chart. The MACD is good. That's saying to me that the yields so far are suggesting that the yields could go higher. We have no position, but I am looking at this and I'm saying, hey, let's look at the TBT. I was asked the other day about the TBT, and I said, as far as I can tell, that's because someone had the TLT. The TBT, now, wait a minute, TLT, yeah, of course, the TBT should be exactly the same chart formation as the TYX. So not exactly, but close, and that's exactly it. The TBT breaks, which is the inverse ultra-short Lehman 20-year T-bond fund. It's at 35.07, it's at 34.82. 35.08 starts a new leg higher. That continues that starts a leg E in the weekly chart, and that would be very important because that would start an F/B in the daily chart. That would be very positive for yields, negative for the bonds. So Dow's now at 42, S&P's 380. There's something going on here. The market really likes it, and I'll be back and I'll tell you something that's going on that I'm very impressed with. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So, folks, we're looking at the T-bond yields, and yields are actually climbing a little bit. They're up at 26.20 for the 30-year. That's 2.62. And what's really important about this is that the stochastic in the weekly chart is at 90% and holding flat. That's bullish. So whether we like it or not, bond yields seem to be moving higher at this particular point. Now, we just had a big spike in the market. Look at the E-mini. It screamed. The 10-minute chart went to a trough D in the arch formation, and then, whoops, started to rally very sharply. I have to consider, because it's a low, I have no choice but to put an up arrow in here, even if we fail. Why? Because it's at recovery highs. It went to a lower low than the previous peak, trough A, that started to move up. And this is all I can do. This implies that there should still be a leg B, a leg C, and a leg D in the 120-minute chart. And if that is the case, remember, this is the pattern that I call the Sears Holdings pattern from way back, where I recognize that an arch formation that becomes a successful test, if it breaks and closes above the arch high, can retest the previous major high, in this case 2130.75, and if it takes that out, you're in new territory. And that's all I can say. So this is actually a blue A, not a gray, but a blue A. All I can say is that would imply, since it has to go to a peak A and then a leg B and then a peak B, that would imply that you've got at least until 12. Yeah, probably let's make it about 12:30 before you can get to a D. If this really is an A, not just a single leg A up, aberration, that is. Okay, now there are a couple of things that I said I want you to do. Have a look at this. GE, my Dow Quartet, GE, acting very well. We have a very small position long on this. It's at 29.48. We got in well under 28, and this is nice action. And I'd say that this is going to be key for us. Why? Because as part of my Dow Quartet, the leader of the pack. It's saying this market is holding extremely well. What this move up says, going to 18,318 on the Dow, it says that if the market holds here, and then let's just imagine that you have not a Clinton win, but a Trump win, or there's something going on that says, hey, we aren't done yet. What if the market closes down 600 or 700 points tomorrow? Well, what this has done says that it's really only down 300 points because you had that almost 400 point move yesterday. You got an extension of almost another 100 points. So this is, to me, really good action because it gives you some kind of a cushion if there is a major downturn. And in that situation, what we need to look at is what happens afterwards. It's not just a single day that you want to be looking at like yesterday. It's a follow through. Today, so far, we've got to follow through. It's ready tomorrow. What if we take off from here and all these people who were wanting to buy and couldn't buy, and in the positions that we wanted to own and we haven't owned, we've started nibbling, but that's all. How did we got to jump on with a big spike, a big gap in the price that we wanted, and the price tomorrow, if we're up 300 points, this is going to be very tough. And that could extend a rally well into November, December. So this is very important. I'm going to talk about something in a moment, just about my webinar and the charts that I was asked to. Could I just show them again? I'll try to pick them up again, but give me a second here. I want to go GE, IBM. What's IBM doing right now? IBM is down 1, so it's gone to leg ABC. This is leg C, and yet it's not participating today. This is kind of a laggard, so it's the old school high tech. It's really not even just high tech anymore. It's all over the show. So then we're going to go to Triple M. Where's Triple M? Triple M is up $1.25. Very nice. So out of 3 of my Dow Quartet, GE, IBM, and Triple M got a real nice takeoff from the lows of the other day, of last week. How about UTX, the 4th one? UTX is in leg C. It's up only 34 cents, but it is acting okay. So out of my Dow Quartet, you've got 2 stalwarts. You've got 1 acting okay and 1 acting poorly. So that means the tilt at this point is slightly positive. But now let's look at this. When you go to Amazon, Amazon's only up 32 cents. And remember what I said, and this is the dilemma I've had. The QQQs have acted beautifully, and then they made what I call the peak F top in the weekly chart. Peak E in the daily, a right arm extension failure, and then peak F in the weekly chart. What's really important about this, look at the monthly. The monthly in all of these charts, especially the QQQ series, is acting so well. So I'm trying to put this together, and I'm trying to say, okay, I've got some pretty negative action in most of the high-tech, the top 6 or 8 or even 10 of the IBD 50, so the top 10 of that group. I've got the QQQ suggesting that at worst we go sideways. No, at worst we go down to sideways. At best, we only go sideways and then start to try to move up, making this, I always do that, when you've got a very sharp down move after a major letter top, that is, then I'll put it in a rectangle and say, hey, that's your parameter. A close below, that is, below 113.45 says, uh-oh, trouble, you're going down even further. A close above, in this case, I'd put it 50% between the two there. Above 118.47 in the Qs, it's trading at 116.81, would say to me, oh, nice action. That's making the monthly chart improve all the time. And now I can go to this. Maybe I'll do it during the break. I'll try to get my webinar, a couple of slides that I was asked about. I'll try to get that in the break. Now let's do something else. The IYT, which is the iShares, IYT, iShares had a spectacular session yesterday. Up huge. Leg D/C in the daily chart, leg D in the weekly chart, only leg B in the monthly chart, getting back into this rectangle that I had drawn ages ago, and it's saying, hey, MACD's improving, stochastic's improving, This is nice action in the transports. Let's look at the XAL, which is the airline index, the ARC airline. It broke out today. It's at a new recovery high, leg E, ABC, leg D officially. That was an overlapping wave. This is a little tough for me to do. I'm going to be very conservative. I'm going to call this, I don't know, to be conservative. I'm going to take the C, call that a D, and call this an E. There, that's being conservative. And in the weekly chart, a monthly chart, that is a B. So all in all, if I assess this, and I did not know, if I did not know this was election day today, I probably would have been buying a lot more yesterday and today. Why? I mean, yesterday wouldn't have been a 300-point day if it wasn't election day, because this is all part of that. But if it were just a decent up day, not strong, a plus 80, I would have said, you know what? I want to be short. I want to be long. I'm going to stay with our short positions, but I'm also going to add some long positions. And the reasoning being that the shorts, some of the shorts that we've have not taken out their buy stops. One is 25% lower than when we shorted it. So we have a little comfort factor. But at the same time, I'm looking at this, I'm saying, wow, I'm looking at all over the show. Commodities have, look at this. Here's the HGX. We'll talk about the copper. And we'll say, what on earth is this? Up 2.66% in copper? A single move to the upside? Wow, that is spectacular. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
You're looking at the history of 3 terms. That's 3 successive terms by the same party. Going into not 1900, but going from the 1920s. The 1920s, there were 3 Republican terms to the Hoover first year of his term, and that saw a major market top of 386 in the Dow for an 89% cascade into the 1933 low. Then Roosevelt came in, and he had 4 terms, so we can't really count that, to 1947. 215's high dropped 23% into the 1948 Eisenhower decline. In a sense, you can say, okay, after 4 terms, you'd expect someone else to take over. But then there was a drop of 23%. Then in 1992, there were 3 Republican terms, and then Clinton came in. That's Bill Clinton. But after a year-long rally and a flat year, 1994, the market soared into the major 2000 March all-time high in tech bust, handing it over to Bush II. So 2016, we've had 2 Democrat terms. Are we going to have a third? That's going to be key here. And that makes it statistically, I said statistically, it's important, but it's only important because we've got a percentage. But as far as statistics are concerned, you really need to go back. You need at least 300, maybe 3,000 instances before you can get a true statistic. So I'm just saying that this has kind of been the history so far of our modern times, let's say. But more important to me is that the Dow monthly chart with my Chapman Wave 5 says that this is a peak C and that the buy mode still exists and that we should go higher and we should go above 18,668 at some point. And at some point is within a few months. That's what it's saying. And you should not break down, not you, the Dow, should not break down under, say, 16,300. Gets to 16,000, I'm going to rethink the whole thing because that would be quite a drop, okay? So that's the way I'm looking at it. So overall, monthly chart still remains very bullish. Daily chart is in a sell mode. It could change that very soon by the end of the day or tomorrow. I can say, whoops, we're done there. But I'm looking at high-grade copper. And this is a spectacular move. This looks to me, it's either a short squeeze type move, or it is a move that you have to consider that the monthly chart has now gone to a leg B. And I always like to say that historically, we haven't seen it perform as usual over the last quite a few years, actually. But historically, very strong copper suggests that it's a work environment. That's all it says. It says there's building, there's the use of copper. In this case, it's stochastic. It doesn't look like a single leg A up. It looks more like, no, I don't mean it looks like an E or an A in this case. And I'm going to say that based on my work, I'm going to call it EA, but my bias is to say I'm actually looking at it more like an A, that it's really like a breakout. Now, the weekly is suggesting this B could pull back from 2.37 to the low 2.30s. And if it holds that and then starts to make another high, copper is on its way even higher. And that's really important. That is an economic plus. Remember, I was talking about the economy, that over a period of the year, I was expecting that as we get towards the end, that we start to see some improvement in jobs. It's got nothing, maybe it's got something to do with the party involved. I'm looking at it just purely on a level that for me is historic. At this point, you should be seeing some kind of growth in jobs, better jobs that is, and you should be seeing wage increase. Now, I don't know how they calculate it or anything like that. Just what I'm saying, looking at it historically. So is this a question that copper's on its own? Let's look at WOOD. Remember, that's the global. Whoops, I'm taking calls. Yes, I am taking calls. I'm sorry, I didn't see that. We've got Scott in Safety Harbor. Scott, how are you? I'm so sorry.
Basil, as I told you a few weeks ago, I got involved in the VIX, just 1,000 shares. I didn't know anything about it.
Whoa, what timing, huh?
And you remember I was all confused about it and said I was just going to put it in the oven. Well, last week, I have a few people that follow me and got them to go on the VIX. And as usual, they didn't follow my specific instructions. Never, ever keep anything on a weekend, no matter how it looks. So I cashed out of mine Friday and made a wonderful profit.
A fantastic profit.
And all
Very good.
4 of my buddies kept it because there was no end in sight, right? Who would have thought that the FBI would come out with something on the weekend?
Oh, boy,
so,
yeah.
of course, they're all upset now because, they got crushed. But, for everybody out there, unless you have to, do not keep things. If anybody doesn't know by now in this market what can happen on a weekend, come on, people.
Yeah, okay. So now let's just do this. So let me explain, folks. The volatility index, I call it, I look at the numbers, and I call it intense selling or intense buying. When the volatility index gets into the 20s, then I take the traditional way of looking at it, and I call it, and it's really a tool of fear. It's really telling you that people are really afraid the market is going to crash or whatever it is, and they're buying insurance. And now we're looking at a VIX that's gone from 2301 to 18. That is a 5-point decline. That is 28% to 31. I can't do it right. It's within.
And I trade
2
VXX.
days. Okay. So now what we're looking at, I have to put U.S. election. I've put that already. And you have to say, is that done with each one of these big spikes to the upside? Well, we'll only know tonight. So far, the market itself, not UI, but the market is saying, no, we are not done. The market is suggesting that the volatility index could drop further because the market is putting into the mix that it's thinking there's going to be a Clinton win. That's just the way it appears right now.
Unless something gets contested, like back in, I think it was 2000.
And that's right.
In which case, the VIX will go up $20.
The VIX index will spike really sharply if there's any hesitation tonight and not a clear win. I think that we might get some kind of tentativeness. So, okay. So congratulations. And you did explain, even when you were doing it, you said this is not to be played games with. Now, you also have potash right now.
Now, I went in back in potash. Of course, I had to get back into it when it was 16. I'm telling you, Basil, this thing is a money tree since I've been on it. I mean, it has had the same range, 16 to 1598, then it goes to 1630, 1640.
Right.
I got in at 1610. I got out today at 1655 again.
Very
Don't
nice.
get greedy. I mean, when you get greedy,
I like that.
you lose.
Yep. Congratulations. That's your plan. You trade your plan, and you've done extremely well. A lot of listeners have been listening to you and are very impressed. I hope that they're listening to you as well for the
greed.
The
Forget
downside.
about greed, folks. Forget about greed because it does not work.
Right. Hey, thanks so much for the call, Scott. Congratulations. You really did a good job.
Basil.
And for the
Let's
first
everyone
timer,
have a great new year here.
And for the first timer in the VIX index, you did a fabulous job.
Absolutely.
Congratulations.
And no matter who wins the presidency, it's really like Kennedy said, stop asking about what the government can do for you. Get off your rear end and do something, because no matter who's president, your life is going to be worthless unless you make it worthwhile.
Good point. Thank you very much for calling. And when we get back, we'll go to Dan in North Reading, Massachusetts. We'll be looking at SCCO, which is, in fact, Southern Copper, doing very nicely. We'll be back straight off this. Dow's up 74, with at 6.8.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, Dan in North Reading, Massachusetts. How are you?
Good. How you doing, Basil?
I'm well, thank you.
Happy Election Day to you.
Well, this is actually, it was actually very quiet at the place that I go to in Newton, Mass.
Same for me. I didn't even have a line, so.
Yeah, I just went right in and just did it. And I think a lot of people must have done pre-registering or whatever they do. That's what it looks like. A lot of people have already voted. Maybe, I don't know, because usually it's quite full. So, yes, you'd like to look at
Southern Copper.
Do you have any?
I don't own it. I was looking at it, and obviously I should have bought it 3 days ago. But
Yeah.
As you've been pointing out with copper going up, and I was kind of looking at it because it's one of the big 3 in the EPU Peru ETF, but hadn't been the only one that hadn't moved yet. So. Yeah.
There was another one that hadn't moved, and I think it's starting to move today. We had in the newsletter took out a break. I think it was a break-even trade because it either we got it or we didn't get it. I can't even remember now, but when nothing happened, it just stood still. Now it might move. So I think what we're looking at here is that two things. I just want to look at the dollar to see if there's any relationship here. Dollar's holding very well. It's down 5 cents. Okay, and I just want to look at gold because, these metals and the currencies have kind of been in their own thing for about 2 months, 3 months now. Each one's been doing a different thing. Gold's now down 1. Yeah, so let me go back to copper. High-grade copper you see this huge move in the copper itself. I would have said, this has all the characteristics of a single leg A up if it had been done in 2 big moves. But this is this is a very unusual. Let me see the time. We've got time. Let me talk about this. On the 24th of October, copper was at 2.08 in the continuous contract. And it closes at 209, and the next day it closes at 213. So now it starts a move that starts a big move initially, and then it walks the 9-period new moving average, takes out all the resistance levels, and has 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 up days, with today being, I don't want to call it a climactic day, because in price, this is the biggest both percentage move, up 2.92% today. It's also the biggest candle that we've had in a really long time, since maybe March, April, And what has happened over the period of time, those huge candles have produced kind of sideways to slightly high and then down periods in copper. But we've never had 3 consecutive monster weeks as we've had. Of course, this is only, what is today, Tuesday? This is only this, not even the second day of the third week. But it has taken out the high in the weekly chart, in the monthly chart of March of 2.3375. So now this is what I'm going to say to you, because, as you know, hindsight is 2020 is just, who was that guy? He used to always talk about it in the Watergate hearings. He used to say hindsight and talk about 2020. Senator Irving, I think his name was. That's right, Senator Irving. And it was his famous expression during that period. Baker was, what did he say and when did he say it? And this is going to be very applicable here to copper, because what was copper saying and when did it say it? Well, copper said, I'm about to move higher. And what's interesting is that copper moved higher, but SCCO was already moving higher on the September the 12th. So I had seen that, but the speed with which it broke out into the 28th was so quick. And then the sharp pullback, 2 days, it plummeted from the 1st of November. So this is what I'm going to say. I'm going to base it on the weekly chart and part of the monthly chart. I know that you're able to take quick profits, but you like to look out a little bit further. And would that be correct?
Yeah. Yep.
Okay.
Definitely.
So I'm going to suggest at 28.48, you start a position. Let's just say you're going to buy 100 shares. I'd buy maybe a quarter to a third, saying to myself, this isn't really the position, but I need this position because the weekly chart is still so strong that if I don't have a position, I'm going to end up chasing it. I'd rather place my position now. If it breaks out and goes to the 29.20s, it's at 28.50 right now, not only will that be really good and suggest that inverted Chapman wave Roman candle of April in the weekly chart with a 31.31 high could be tested, but it says I'm in the position, and any pullback after that would say, if I've got that breakout and a close above the high of the 1st of November of 28.70, I want to be in that position. This is now in play. Copper is in play, and it will take something very unusual to see it drop 50%. So this is a starter position. And all I can say is that if it's a starter position, because it's a starter position, I have to have a stop that's wider than if I'm actually setting everything up, expecting higher prices. This is where you really don't know. Could make a V-shaped double top. So 28.51, if you want to start your position here, it's at 21, regardless of whether it goes higher, the 21.70 to the 27.30 area is going to be really important support, because if it takes that out, you've got to be prepared to see SCCO, that is Southern Copper Core, drop and retest the low of the 4th, and that's at 26.52. So I would say you can get in now. You have to have a wider stop. If it starts to go higher, then you can raise your stop, because you want to be adding a second position on any break to the upside that goes close to 29 and then only pulls back modestly. Really, I'm talking about going back to the 28.70, 28.50 area, and then you might want to add. So call me if that scenario works out and the cup scenario we're looking at in the weekly chart works out, that's really going to improve the monthly chart. The monthly chart says, hey, don't get too carried away. I have a way of failing. But this move in copper says there's something going on that is really important. I want to acknowledge that, and that's the way I do it. Start maybe a 1/3 position, quarter to 1/3 position. You have to have a wider stop. I'm saying the 27.30 on a stop for this run. Maybe even you can, even if you want, give it more room. You can give it room all the way to 27. Oh no, not 26.52. I would have to say 27.20 to 27 would be my maximum stop on this, because I've made it a little wider than I normally do, but that's the way I would do it. Start a position here saying, hey, based on the 120-minute chart, based on the single leg up in copper itself, I've got to be prepared for some kind of a pullback. Does that fit the scenario you're looking at?
Yeah, no, that sounds good. I guess I'll tiptoe in, see how it goes.
I think so. And that way you're in it. If it just breaks out, so you're in a smaller position than you'd like, but at least you're in the right position. It allows you room to think about adding. At the same time, if it's going to fail, you've got yourself just a small position, because that weekly chart to really increase the likelihood of going into that 31.31 high that was made back in April. Today's Tuesday. By Thursday afternoon, Friday, you have to at least once have tried for the 29.20s. Hope that helps you.
Okay, thanks, Basil.
Thank you. That was Dan in North Reading, Massachusetts. We're looking at SCCO. Dow's up 75, S&P's up 7. They're in parallel down the S&P, same percentage gain. I'll be back. Basil Chapman, Tiger Technicians Hour. Let's go to the next phase, and we'll talk about what can happen this evening.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, let me just do this quickly. I had a question of the Den AG. Want to know, what about ANTM, Anthem Inc.? I used to have this all notated. Anyways, having a fabulous move today, up 2 at 125.53. I said to him, this is a really good move because it's broken all the left side resistances near term. Most important is it must hold 122's support into the next few days. If it takes out 128 by Friday, I think this is going to go quite a lot higher. That would be a really good sign for this particular stock. Made a major high at 173.59 back in June, and pulled back down to the low that was just made a few days ago of 114. So it's had a huge move to the downside, and maybe now it's ready for something else. The weekly chart says it needs a little time, but if price This is the candle that you're looking at right here. The candle of the week of the 23rd of September, 129.62. That's really what you want to see pierced over a period of maybe 2 weeks or 3 weeks, because if it takes out that 122 support, that's not going to work. So this is a very important moment for it and many others. I had a question about Hertz, HTZ. HTZ, wow, what a move to the downside. 13 points, cut by a third, down 37%. This is not good. You know, I looked at, over the weekend, I looked at CAR, which is Avis Budget Group. It seemed to be coming back nicely after a sharp pullback from the 39 area down to 32, 31, 32. Had a nice spike, and then today it gapped down, maybe because of Hertz. But it's going to be really important. Avis Budget Group, Auto Rentals at 35.52, down 3.48. By Friday, again, this is a stock is going to be very important market-wise because it's telling us about things that are not so good in that area of auto rentals. But that also could be Uber and a whole bunch of other things. So you want to see this stock back in the 37s by Thursday. I'd say by Thursday, because if it pulls back under 33 after trying to bounce off the low today, that's just not going to be very good. Next question was Halliburton. Hey, this is nice action in Halliburton up until it hit 50, about 51, just back in October the 19th. Now it's pulled back and it's holding quite well. So this is what I'm looking at. The monthly chart is improving on Halliburton. I think it's oil service. I can't remember the exact title of it. At 47.33, down 11 cents. If Halliburton in the next week closes under 45, it's done for in this session. It's going to retest 43.20. But if somehow or other it manages to move over 48.30, I would have to say it's in play, and this would be a very nice stock. So those are my parameters, and I really have to say if this, if that. I don't like to, but those are the parameters I'd be looking at. If you have it as a long, I'd just put a stop on some of my position under 45.08. All right, next question was, that's Halliburton. AXP, yeah, American Express. You know, I looked at these last night. AXP is held very well, but only if you're looking at the day and the weekly. The monthly chart says, wow, that's a lot of work to be done. At 67, it needs to push much, much higher. Let me just tell you this, that within the context of those credit card companies, a lot's going to happen with the interest rates. So we can do a lot more tomorrow morning when we look at it. Let's see what happens. Okay, now let me just go through this very quickly. This is a very optimistic market right now, suggesting that the market is anticipating, this is the way we think it is because that's the way it's acted from yesterday's move, that it's expecting a Clinton win. The big disappointment will be if there's any hesitation at all that it's not clean. Of course, that'll be an upset. But what's really important right now is the volatility index, looking at Brexit, looking at all these different icons that you put at the top of a major move, having gone to 23.01 in the market, basically holding pretty darn well. I would have to say that the VIX is indicating that if there's any amelioration of the election and there's a hint tonight that Clinton's going to win, we could see the VIX pull back very sharp. This is a really important session for the market coming up. Tonight will tell us. We'll go through it again tomorrow. Have a great day. I'll be back with Tom later on.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.